Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial jargon so you don't have to. Today, we're digging into a report from the Federal Home Loan Bank of Atlanta. And let me tell you, it's got some interesting reveals about how this bank operates and secures its funding. You know, most of us think about banks and instantly picture customers depositing money and taking out loans. But the real engine for a lot of these banks, especially federal ones, is the massive debt market. This report sheds light on that very process. So what is the big deal? Basically, federal home loan banks like Atlanta raise most of their cash by selling what they call consolidated obligations. Think of these as bonds and notes that are like IS sold to investors on the big financial markets. It's a crucial way for them to get the funds needed for their operations. The really important thing to remember here is that these consolidated obligations are not backed by the US government. They're backed by the financial strength of all 11 federal home loan banks working together. Now, let's dive into the numbers because this is where the action is. This table, Schedule A, shows us the specific debt instruments the Federal Home Loan Bank of Atlanta committed to issue. It's basically a peek behind the curtain at their funding strategy. On the 10th of October 2025, they committed to issuing a bond with a par value of $150 million. This bond is set to mature on the 15th of June 2026. It is a variable rate bond, meaning its interest payments will fluctuate based on market conditions. Then, just a few days later, on the 14th of October 2025, things really ramped up. They committed to a flurry of new debt issuances. To raise a $5 million issuance that matures in February 2026, another much larger one for $1 billion maturing on the same date, and then another $1 billion issuance that will mature in May of 2026. Following that, there are two more issuances on the same day, both maturing in June 2026, one for $1 billion and another for $35 million. And in a slightly different category, there is a bond issued on the 14th of October 2025, maturing in November 2026, with a fixed coupon rate of 3.795%. This one also has an interesting feature. It is callable. That means the bank can choose to pay it back early on specific dates, in this case starting the 6th of April 2026. This gives them flexibility if interest rates fall significantly. The document also clarifies terms like optional principal redemption. This simply means the bank has the option to pay back the loan or bond early if it's beneficial for them. Think of it like being able to refinance your house if interest rates drop. Most of these issuances are what they call a variable single index floater. In plain English, this means the interest rate on these bonds will change because it's tied to a specific market index, like an interest rate benchmark. As that index goes up, your interest payments go up, and as it goes down, your payments go down. It is a standard way to manage risk in the debt markets, and the report is signed off by Thomas J. Costello, who holds the title of MBS Portfolio Manager. This tells us that managing these debt instruments is a key part of their strategy. Now, let's step back and look at the bigger picture. What does all this mean? The Federal Home Loan Bank of Atlanta, like many large financial institutions, relies heavily on the capital markets for its funding. These consolidated obligations are its lifeblood. The sheer volume of issuances, totaling well over $3 billion in a very short period, shows a very active funding operation. While these issuances are critical for the bank's ability to operate and lend, it's super important to remember that these are not government-backed. Investors are relying on the collective financial strength of all the federal home loan banks. One thing to watch out for is the variable rate nature of many of these bonds. If interest rates were to climb rapidly, the bank's future borrowing costs could increase significantly, and this could, in turn, affect its lending rates and profitability. On the flip side, if rates fall, they have some flexibility with those callable bonds. The fact that they're issuing these large sums also highlights the interconnectedness of the financial system. The federal home loan banks play a significant role in providing liquidity to the housing finance market, and their ability to access funding directly impacts that. In terms of overall direction, the bank appears to be consistently leveraging the debt markets to fuel its operations. The risks, as mentioned, are tied to interest rate fluctuations and the overall health of the financial system that underpins these consolidated obligations. An opportunity lies, as always, in managing these risks effectively and continuing to serve its members, often community banks, with necessary funding. So, to wrap it up, this report tells us the Federal Home Loan Bank of Atlanta is a robust player in the debt issuance arena, constantly managing its funding through a variety of bonds and notes. It's a complex dance of interest rates and market demand, all to keep the flow of funds going. Alright, that is our breakdown of the Federal Home Loan Bank of Atlanta S latest filing. What is your take on these numbers and what they signal for the company S future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.